All right, everyone, here we are with ticker symbol AAPL, Apple Inc. And before we jump into this chart, I want to state some things. And the first thing is welcome to all my investors, first-time viewers, and investors to my channel. And to all my subscribers, welcome back. So here in Apple Inc., we have seen a bullish run and recovery after hitting these lows of about 112. Obviously, there's been a lot of volatility up and down since the lows of 103. The slight dip again at 104, and then the recovery has been seen since 104, and this has been rising, hitting newer highs and newer resistance levels, obviously jumping up and down with the volatility of the market. And today the bulls were able to swing up, get higher away from the 50-day moving average into bullish territory, further away from it, confirming that they are gaining control on this chart. So we're going to look at our resistance level, which needs to be broken through by the bulls to continue this run and this momentum so that it can continue to move further away from the 50-day moving average in an upward direction. And we're going to look at our new support level here, which is when this leveled off and is actually the lowest point reached before this continued the run. Now, the 50-day moving average is 115.76. I'd write that down. Super important number. Lets us know on what side of the chart we're in. We are in bullish territory. The moment that gets crossed, we will be in bearish territory. Now, we are at 117.67 and slightly above that at 117.75. That is our resistance level. The bulls are going to want to break through that to go ahead and turn that into a support and start to work their way up to newer highs and newer levels of resistance. So super important. The bulls need to break through that to continue to work further away from the 50-day moving average in an upward direction and start to reach newer resistance levels and newer highs. On the other hand, we have what the bears want, and the bears want to cross this support level. They want to get as close as possible to the 50-day moving average and get as far down as they can. And the first support level here is 115.99. The bears want to cross that, and you have a small window between 115.99 and 115.76 to see how this stock is reacting. You're still in bullish territory, so you're going to want to see if this gets crossed. Are the bears dominating the chart, bringing this down to newer lows, or are the bulls trying to reappear and bring this one back up to keep it in bullish territory and from falling into bearish territory? Because if the bears accomplish bringing it down this far down and getting closer to the 50-day moving average, they're not that far from their goal, which is actually getting below the 50-day moving average into bearish territory. So I want to emphasize, pay close attention to how the stock is reacting at this location at 115.99 and see how quickly is it moving to newer lows, or are the bulls trying to reappear, or did they use it as support and bounce back to hit newer resistance levels and get further away from the 50-day moving average in an upward direction. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications to not miss a single video that I post. Share this with your friends and community. Don't forget to hit the like button and let me know you watched this video. And thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here, and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.